Keeping up the stimulus seems to be the order of the day. For more on the U.S. market's record-breaking rally, we're joined by Allison, founder of Unio Holdings. John, so keeping up the stimulus, that seems to be the predominant theme both in the U.S. and Japan. What are your thoughts?
Well, first of all, I think that there are, the keeping up the stimulus argument really is about two people. There is Ben Bernanke as Clint Eastwood, and there's Ben Bernanke as the puppet of a ventriloquist. Is Ben Bernanke, as Clint Eastwood is, saying a couple of days ago exactly what he said on June 19th, and that is that he's actually beginning to withdraw stimulus. He's keeping interest rates low, but he's tapering. That's, in my view, the real Ben Bernanke and the real thing that is being said. At the same time, the markets want a big daddy, and they want to feel the big daddy.
Sugar daddy.
Big sugar daddy. And the big sugar daddy is going to take the baby and take him along. And they project onto Ben Bernanke the things they want to hear. And I think that's what you're seeing right now.
Well, it's interesting that you say that because a lot of analysts are saying, hang on a minute, he didn't say anything different. These meetings aren't actually saying anything different, and we're going to be in for a surprise because come September, some tapering may start to take place. So it's really this question, this Wall Street game of interpreting the underlying meaning of what Bernanke is actually saying, the reading between the lines game.
Exactly, and I think this is where you've got the ventriloquist. You have somebody holding up the Ben Bernanke puppet, and then there's real Ben Bernanke, and the real Ben Bernanke actually said what your analysts are saying. It's nothing different from what happened in June. He's saying exactly the same thing, and yet people today are trying to project onto him something else, something that's more optimistic, and I think they're going to be incorrect. I think real Ben Bernanke, Clint Eastwood Ben Bernanke, actually did some very real things that we see in the market. He has raised real interest rates in the U.S. You know, after inflation, interest rates, real interest rates in the U.S. are 1%, and they were 20 basis points 6 weeks ago. And you know, currencies are different today because the U.S. dollar is stronger versus the yen versus the euro and so on. So real Ben Bernanke has actually had real effects. But today, I think we're seeing the ventriloquist version of Ben Bernanke.
Okay, so the market's reacting on what you think is their interpretation, but we're also into the second earnings season. Do the fundamentals support the rally that we've had so far, and will they support it going further?
The bottom line is, I think it's going to be tougher. I don't think it's bad, but I just think it's going to be tougher. You have profit margins in the U.S. companies at the highest they've been in 50 years. It's just going to be tough to keep those profit margins going. You have revenue growth in the U.S. that's okay, but not great. So I think things are all right, but I think it's going to be a somewhat tougher road to hoe. And so as a result of that, I think there's more risk of things not working out, and therefore you've got to be more selective if you want things to work out. I think it's really, the market is going to have to sort of earn its keep a lot more because the big sugar daddy's not going to be there as much.
So you're seeing a sell-off coming soon?
I'm seeing a return to reality coming soon, and therefore, but a selective return to reality. I think this is the world of selectivity, and if you can.
So what do you select then to put your money in?
Well, I think you select, first of all, you select businesses that are understandable around the world. And we know, we look at things globally. So we look at Europe, we look at Japan, we look at emerging markets, we look at the US. Understandable businesses. I think you want to look at quality businesses. You want to look at businesses that are selling at a decent price. You don't want to overpay for things. And you want to look at businesses where there's some payoff through some competitive advantage. I think if you can do that, you can find things, and you have to be very, very careful. You also have to be very careful about the macros as well. So
let's touch on commodities briefly. Gold bouncing back off Bernanke's comments, and the dollar weakening. What's going on there? Investors losing faith that Bernanke's printing too much money based on their perception of his comments, and gold playing the hedge? I
think it's a speculative fake out. I think gold is going down further because I think the underpinnings of gold, which are high inflation, is not there, fear is not there, and lots of buying in India and China is okay but not great. So I think gold is not, the dollar I think is you know, the currency markets are very weird places. I think it's a temporary fake out. I think the euro is going to go down because I think Mr. Draghi has basically made it very clear that he's going to loosen, and I think the Bank of Japan and Mr. Abe are on a huge role that is going to, we think, actually going to pull the yen down to 110 yen on the dollar. So I think this is a temporary fake out. Will it last a day? Will it last 2 weeks? Who knows? But
temporary fake out, Clint Eastwood and the ventriloquist. A lot of interesting analogies.
Right.
Thank you so much,
Thank you,
Allison.
Michelle.
Thanks for your insight, Allison, founder of Unio Holdings.